All right, we've got a closing bell, and we started the session trading much higher. Let's see where we're going to settle down. The Dow's going to be off 100 points. S&P 500 is going to be down about 8 points. Nasdaq's going to manage to inch out some gains, roughly up about 8 points. And some of the laggards on the Dow, just to let you know, Visa, Dow Inc., and McDonald's all off by more than 1%. Visa was off by almost 3%. Let's go back to the guests. And Ross, I wanted to ask you, when you look at some of the fintechs, because we got the big news regarding Square today, when you look at how they're performing, when I look at Visa, little surprised that they would be off, especially in a consumer-driven economy where people are buying. Ross, what do you think's going on here?
That's a great question. I do think there's this unknown, right? This kind of delta overhang. Earlier in the year, we could tell this story about the roaring 20s and a big reopening and boom. Well, we've had to pull that back a little bit. GDP was much softer than expected. The consumer spending is actually really strong, so maybe that goes against this narrative a bit. But I do think there's one, it's just the unknown overhang, and then two, we just have to re-rate kind of our growth expectations a little bit, even if they're still strong, even if they're still above whatever the last decade long trend has been. Anytime growth expectations come down, you'll see it in the stocks.
And Ross, speaking of growth expectations, of course, there's huge uncertainty here with the Delta variant. I guess I'm curious just how you think the market is looking at this point and what's priced in right now.
Yeah, it's a good question. We're seeing what so far has amounted to a historic earnings season, just really strong across the board, across all sectors. And the market kind of hasn't budged. I think there was almost a level of perfection priced into the market coming into the summer. And a reopening that was really strong as well. I mean, you saw the GDP miss. I do think that there's a lot of things kind of working against the market near term, both on a technical and fundamental perspective. And, I wouldn't be surprised to see some volatility and maybe a bit of a correction here in the near term before resuming what should still be a really strong structural bull market. I mean, we're still growing at 6+%. That's nothing to sneeze at.
Scott, I saw you nodding your head when I was asking Ross that question about fintech and what's really going on here. I'm trying to pull up the sector, but my Commodore 64, the computer it's steam driven here. But financials were off today. They were flat essentially. What is going on? Shouldn't we see the financials much stronger, especially with people spending so much money?
Well, yeah, but as it relates to Visa specifically, what's going on is that Afterpay is anti-credit. One of the ways that millennials and younger people, like to conduct their business is less through credit cards. And this concept of buying something and then paying it off in installments is actually the opposite of a Visa card. So I think that's why you saw Visa off almost 3% today, despite the fact that that the Afterpay valuation was very, very rich.
Ross, you mentioned we could see a bit of a correction. I guess what's a bit of a correction in your eyes? How big of a pullback could we potentially see?
Yeah, I mean, we could see something big, but I think probably 5-10% makes plenty of sense. The story circulated last week. It's one of the longest stretches in the last century without a 5% pullback, despite all of the volatility under the surface with the growth value rotation, with things like the meme stock mania. I mean, we haven't had a 5% correction off recent highs this year. That's pretty astounding considering the headline risk. We're still in a pandemic, the Delta variant, all of the other things that are happening. So I think a 5 to 10% correction shouldn't just be expected, but would almost be healthy for a market. Sentiment is still fairly hot at the same time that you have the market narrowing a bit, kind of a weaker seasonal stretch as well. So it almost seems like the perfect storm for a bit of a correction, but viable in our opinion.
Scott, when Shauna was asking about retail opportunities, where do you see retail opportunities with $2.5 trillion in the bank that consumers have to spend?
Yeah, the retail sector, the real estate retail sector has come back really strong. We got Simon Property Group reporting this evening, but their foot traffic is almost back to where it was pre-COVID. Now, a lot of the retail landlords have benefited from the fact that COVID actually rationalized the supply. A lot of the weaker malls shuttered, a lot of the weaker stores shuttered. But we're seeing occupancies return to pre-COVID highs. A lot of the rent that was deferred is now getting paid. And across the board in real estate land, This has been one of the strongest earnings seasons that I've ever seen in my career. And it's really driven by three things. A big rebound in demand as we reopen, and all that money, Adam, that you mentioned sitting in the bank. Very low interest rates, which are a big tailwind for real estate values. But also because the world shut down for a year, nothing new really got built. Okay, so as this demand is percolating, you don't really have supply to absorb it, at least for the next 12, 18 months. And that's creating a lot of rent power for landlords.
Ross, what about you? I mean, just more broadly speaking, where are you seeing opportunities? Are you looking at some of the sectors that have been beaten down, like energy, financials? We were talking about that earlier, both off pretty significantly from their recent highs. What are you buying now?
Yeah, I think near term, we still like the cyclical sectors, the economically linked sectors, things like industrials, financials. The rate story is challenging, particularly for financials if interest rates don't rebound. And we ultimately think they will, not some big rebound, but at least, the 10-year move back towards those earlier year highs. And look, the thing is with industrials, you have a multi-year tailwind from infrastructure. You have the economy still reopening. I mean, we feel like this reopening has kind of had a big summer, but there's plenty of opportunities, especially as it gets stretched out a little bit with the Delta variant kind of pressing pause. And finally, the earnings picture for 2022 on industrials looks really strong. Financials, again, more of an interest rate story, but we think they move higher. We think the yield curve probably re-steepens to an extent and tend to like that opportunity there.
Scott Ross, hold on just a second, because we've got Dan Halley standing by with Take Two. Their earnings are out. What can you tell us, Daniel?
That's right, Adam. They beat on both the top and bottom lines here with $711 million in revenue versus what was expected to be $684 million in revenue. Earnings per share also came in higher, $1.01 versus 90 cents. And what's interesting is they're also saying that they'll beat out forecasts for Q2 2022. This is their fiscal 2022 year with 815 million to 865 million of revenue expected. Estimates were for 868 million. So they're just falling shy of that, actually, but still not too far of what estimates were. Really what's happening is we're seeing that analysts worried about what's going to happen going forward as far as their various releases. They haven't come out with a new game in the prior quarter, and what they're expecting to release is really kind of remakes of the prior games that have done well for them, the Grand Theft Autos, the Grand Theft Auto Online, the Red Dead Redemption 2. They're getting that kind of revenue, but really what they need is kind of a new blockbuster to come out, and they don't have that anytime soon. So we'll hopefully see something in the future from them about new releases.
All right, Dan Halley, thanks so much. Again, the stock off nearly 5% right now, so certainly a name to keep in mind as we turn our focus to tomorrow's opening bell. But Scott Crowe, CenterSquare Investment Management Chief Investment Officer, and Ross Mayfield, Baird Investment Strategy Analyst, thanks to you both for being here today.